Can I deduct my own labor when flipping a house? By the end of this video, you'll know exactly what labor and expenses are deductible and how to structure your flip the right way right from the start. Are you doing the work yourself on a flip? I'm going to explain to you why the IRS might not let you write that off as an expense. Novice flippers sometimes think they're saving money by swinging the hammer themselves. We're going to talk about exactly what that does to your taxes. In this video, I'm going to explain exactly why your sweat does not equal a deduction and what you can do to keep more profit. All right, here it is. The IRS does not allow you to deduct your own labor. The only time you can deduct labor is if it is someone else's that you are paying for. But you're going to have documentation of that. You're going to have to make sure that you're giving them the right paperwork. So if they are an employee, then they would be a W-2 employee, and that is fully deductible. If they are a contractor, they have to fill out what's called a W-9 form with you. Let me rephrase that. They should fill out what's called a W-9 form with you. That is, they list out their social security number or their employer identification number so that come the end of the year, you can issue them a 1099 and show exactly how much you paid them. Here's the problem that so many people make, and I've done this and I still do this sometimes by accident. We hire a contractor and we don't get them to fill out a W-9, and the relationship doesn't go quite as planned. You've now paid that person $10,000, $15,000, $20,000 for work. They didn't give you their social security number. You can deduct it, but they don't have to claim it on their taxes. They should legally, but they don't because there's no proof that you actually gave it to them besides the check. So it's a little bit confusing, but make sure they fill the W-9 out when you start the job, when your relationship is at its best, because trying to track that down later is no good. Once you do that, that becomes labor you can actually write off against any profits that you make on the job. Now, there's a lot of different kinds of work you do as a house flipper. Number one, you're going to be searching for the house, and you're going to be buying the house. You're going to be negotiating for the house. These are all things that many times you might hire a real estate agent to do for you. And if you hire someone to do it for you, then you can write it off. But if you're doing it yourself, well, you can't write that off because you get to partake in the profits yourself. You might say, but Glenn, I'm going to get in there and do some repairs myself, or I'm going to manage the project myself. Well, guess what? As the owner of a business, and if you're flipping a house, you now own a business, you are the chief cook and bottle washer, they call it. You have to do all that stuff yourself, and it's not deductible because at the end of the day, you get to take part in all the profits that come in as well. And the truth of the matter is, unless you're a licensed contractor, you should not be doing any of the work yourself. Not to mention, you can hurt yourself. On the second flip Amber and I ever did 20 years ago, I thought I was saving money by putting the kitchen sink in myself. And while the sink fits in pretty easily, you know what doesn't? Is trying to figure out how to get the fitting up to where the hot and cold supply come in and getting your back underneath in the counter and doing that. Do you know I tweaked my back a little pop there, and it's been 20 years. My back has never been right since. So it was not worth saving the $100 to have a plumber come out there. So be smart with your time. Think about long-term decisions and long-term effects of the work you try and do today. When dealing with contractors, don't pay cash. Sometimes they say, I'll give you a better break if you pay me cash. Now, if you're not someone that deals in the cash world, like you don't have a restaurant that brings in cash or a business that brings in cash, then you don't really have cash just to give out. And you're not saving that much, and you also don't have any way to track them. And also, as a side note, you're not protected under any liability. If they fall or get hurt and they want to sue you or whatever, you can't even prove that you paid that contractor. So make sure that you're paying people with a business check or a business wire to their account. Be smart. Treat your business like a business. So there's a little bit of confusion on if materials are a write-off. They're not technically a write-off. They're called a CapEx or a capital expenditure, meaning you are putting, let's say that you bought $10,000 worth of material to put into the house. Well, that's not an expense. It actually increases the value of the asset or of the house, where if you pay a contractor $10,000 for labor, that is truly a deductible expense, if that makes sense. It's a little bit confusing because you are still spending money, but it depends on how you qualify it on your tax return. This becomes really important when you're hiring a contractor who's going to pay for the materials inside of your contract. Just make sure that in that contract it's stipulated how much is for material and how much is for labor. If they give you a blanket price, there's confusion on what is capital expenditure that's going to be added to the value of the property, as opposed to how much of this is labor that's actually tax deductible for you as a business owner. Now, there is some confusion there, and I understand that, but just please understand that it's still, whether you're paying $10,000 for material and $10,000 for labor, you're still putting $20,000 into the property you're going to be able to get back out. It just really comes down to how it is laid out on your tax return and in your books. This is why it's so important to have a good CPA, of which I am not. I'm a real estate investor and educator. That is what I do. I am not a CPA. So make sure you have a good CPA on your team that can help you really better understand what's the best strategy for you on your tax returns. On a side note, when you're shopping for your CPA or your tax professional, don't go to your local H&R Block or cheap place down the road. If you're going to find somebody to do your taxes for $150, you get what you pay for in that space. Find someone that understands real estate investing specifically and make that person your CPA. They know the ins and outs of things that the average tax preparer has no idea about. Make sure that you're smart here, because you can save yourself thousands of dollars or tens of thousands of dollars or even more depending on the size of your business. Our company flips over 100 houses a year, so you can imagine we deal with a lot of contractors. So we developed a spreadsheet that's very simple. When we hire a contractor, we make sure we have a W-9 filled out before we issue them their first check. You'd be amazed by putting something like that in place and saying, "Oh, I'm sorry, Mr. Contractor, I can't give you a check until I have your W-9. They'll fill the W-9 out. Once we have a W-9 on file, that column goes green. And here's another side note. We also make sure we have their liability certificate and their workman's comp certificate on file with us listed as an additional insured. And those spots also have to be green before we issue the first check. If you implement a very simple system like this from the very first day you're investing, you're going to drastically reduce any liability and problems you're going to have come tax time. As you can imagine, being over 20 years in business, I have met a lot of people, hundreds if not thousands of people that are in business, and the topic of taxes comes up all the time because taxes are our #1 biggest expense that we have. And I can't tell you how many people say to me, "How much do you pay for your accountant?" And I say, that is the dumbest question to ask somebody. The question is, how much money did your accountant save you in taxes every year? And they always look at me and go, "What do you mean?" I go, "Are you really trying to shop for an accountant to find the cheapest accountant? I want to find the best accountant." I have paid well over 5 figures a year for my accounting services and my tax services for well over 2 decades now. Even before I made millions of dollars, I spent over $10,000 a year on a tax accountant. What I learned was tax accountants know things that other CPAs and accountants don't know. There's a very big difference between a bookkeeper, an accountant, and your tax accountant. Make sure that you find a tax accountant that knows all the ins and outs of real estate investing, all the ins and outs of the law, that is seasoned, that's experienced. It doesn't just work for a firm, preferably they own a firm. I worked with a gentleman for many years in Florida. I lived in upstate New York, never met him. He came as a referral from someone else who was a very high income earner. And I met this gentleman and realized very quickly that having the right accountant on my team was amazing. As a matter of fact, early in our career, Amber got audited by the IRS, and I was freaking out, going, "Oh my God, I'm gonna be audited." And this accountant told us exactly what to say because he used to work for the IRS. We went in, did everything the way he said it, and the woman walked out and said, "You guys are good to go." Shook our hand, gave us a deduction for a cruise we had written off, and we had to legally prove why it was a business cruise, but we did because of what the accountant told us to say, because he knew how to make it work legally. I can only tell you this. The best thing you can ever do is find a tax professional on your side that makes sure that you do not pay everything that other people are paying in taxes. You're going to pay them a little bit more money, but in the end, you're going to save yourself tremendous amounts of money and become that much wealthier, that much faster. Invest in a great tax accountant. You can't deduct your own labor, but you can control your own profits by knowing your numbers. Go watch my next video so you can learn how to evaluate a deal like a pro. That way your next deal is going to make sense before you even lift a hammer. We've taken over 20 years of blood, sweat, and tears to put this document and this video together that we're going to give you for free. So if you're serious about being a real estate investor, go check it out. If the video is not right here, then I guarantee you the link is right here in the description below.